So today we're going to take a look at Lululemon stock. The stock had a pretty terrible day on Friday. The stock was down 14% after reported earnings, and I've got to say, if it wasn't for the big red day that we had on Friday, it might have not been down that much, but because you reported some bad earnings, well, not bad earnings, we'll get onto the earnings in a second, but because there was reasons for the drop, and you reported on such a red day, that's going to push your stock a little bit lower than maybe where it would have gone on like a green day. But we're going to take a look today at Lululemon and if I could go buy the stock. Now, I'm sure most of you guys are aware of this, unless it's your first time here. I did used to own Lululemon. I started buying the shares around August time 2024. The stock went up quite a decent amount, and I did sell a lot of my shares out during January, February time, and I made a good amount of profit on it. And today I'm going to look at the stock and is it time to go buy Lululemon stock again? So let's take a look at it. So Lululemon, in case you don't know, I'm pretty sure you would have seen them on the high street or just be aware of the brand in general. They are a clothing brand, particularly I would say with women in particular more than men, but they do men's clothing, and that is actually an area that's actually growing pretty well for them at the moment. And they are what I would say a very popular brand at the moment. I would say that they are doing very well, they're expanding very well, and when you look at the trends at the moment, they are very popular with teens. That normally translates into other areas of age categories, and as well as that, I would say that they are doing that well, that they are one of the reasons why Nike is struggling a little bit. And Lululemon are one of those companies that are taking or have taken a little bit of market share from Nike over the last few years, and one of the reasons why Nike are struggling. Now, when you look at Lululemon's latest earnings, they were actually okay, to be fair, if you look at the headline numbers. So if you have a look at the headline numbers, GAAP EPS was a decent beat of 0.27, revenue of 12.5% revenue growth with a little bit of a 30 million beat there, as you can see. They did do a little bit of a repurchase of its shares as well. Overall, these are pretty strong numbers. 12% revenue growth, EPS beat, profit moving up in the right direction as well, a little bit of share buyback. If you look at the numbers, the actual earnings for this period of time, you'd actually go, these are pretty good earnings, especially when you look at the environment they're in. You know, it's a pretty weak environment out there. You've seen so many businesses, a lot of consumer brands struggling, and Lululemon come out with these numbers, and you're looking at these numbers and you're thinking, these are pretty good. You know, you're looking at someone like Nike, for example, and you look at the numbers that they've recently come out with, and the guidance, you know, they're whatever it was, 15% down negative growth in the next quarter for Nike. You look at their numbers and you look at Lululemon's numbers during this time frame, and like, you know, Nike would wish to do these sort of numbers. So yeah, for the time period that we're in, that is actually pretty good numbers from them. Now, obviously, the stock went down. So why is the stock going down? Well, the stock is probably going down because of the outlook. The outlook was a little bit weak. So if you look at the first quarter outlook for 2025, they do expect net revenue to be up 6 to 7%. Now, you would actually say probably in this time period, that's actually not too bad, because once again, if we go to poor Nike over there, you know, Nike are massively struggling, and these guys are still pulling out some decent growth. Now, also what might make people a little bit nervous is the reason why they said the slower growth to what they've historically done. And the reason why is because of the inflationary impacts that could potentially be coming in, the weak consumer, being a bit nervous around the trade war that's going on. So people are maybe thinking, oh, okay, they are starting to see some impacts. That makes us a little bit nervous. And obviously, 67% growth is a lot lower than what Lululemon historically have done. You know, if you look at what they've normally done, you know, Lululemon is historically a company that grows at like 20%-ish, shall we say, 20% revenue growth. So it is a lot lower, and you can see the slowing trend here of that coming in. Now, the big thing that you go to is you can look at this two ways. Some people are out there going, these are still really good numbers considering when you look at other competitors, Nike again, sorry. And some people are saying, well, is this a trend? Is this a trend now where it's not just because of the economic impact that we're in? This is something that might longer term stay at these sort of growth rates. And when you're valuing a stock, there's a big difference. You're going to value it if you've got a company that's growing at 20% a year, or you've got a company that's growing at 7% a year. And if we look at the future forecast of Lululemon, you can see here there's 6% now forecasting the revenue growth. Still a nice little jump up in the EPS, but they are starting to forecast a little bit of recovery next year. Maybe the consumer gets a little bit stronger as we go ahead. Now, if we do look a little bit further into the earnings, there's still some positives in there. So international net revenue, which is going to be the major growth driver for Lululemon in the next few years, international net revenue still increased 38% or 40% on a constant dollar basis. So they're kind of like, Lululemon is one of those businesses now that are a little bit more like maximized in the US. They're nearly there. They're nearly saturated in the US. There's still a bit of room for them to grow in, but they're at a good shape in the US. The big story for Lululemon now is the international growth, especially China. China's a major growth driver for them going forward. And if you look at the international part of the business still has strong growth. And even on the guidance for the international business was still pretty strong. So you'd say, what is the major driver that will drive this company forward for the next few years? And you'd say this part of the business. And the numbers for that sort of business is still looking pretty good, which is a very good positive for it as well. What we're seeing as well is because they are still doing their longer term guidance, which is by 2026 to get to 12.5 billion in revenue. Clearly, they think a lot of these impacts are going to be short term, and they do believe that international growth is still going to lift them to their longer term guidance, which is good to see. It wasn't removed out of the latest earnings. And as well as that, what we're seeing at the moment is gross profit. Gross profit increased 15%. It's actually growing more than the revenue, which is great to see, because that says to me there that they're not having to discount things. They still have a lot of pricing power, which says that Lululemon is actually doing quite well if they've got that sort of issue. Well, it's not an issue, it's a positive. Someone like Nike, when you going back to Nike again, you can tell I don't like Nike. When you go to Nike, their gross margins are absolutely on the floor because they're struggling massively, they're struggling with popularity, they're having to sell the products at cheaper rates. Someone like Lululemon, you'd look at their gross margins and you'd actually go, actually, they're doing really well, and it shows there's still a bit of demand at the moment for Lululemon at the moment. The other thing is the company is still majorly profitable, as you can see here, nearly 2 billion in profit being thrown off every year. Balance sheet wise as well, they've still got a pretty cracking balance sheet. There's no debt on there as well, and they still have a pretty healthy cash balance, which they could continue to throw into more share buybacks going forward. Yeah, I looked at Lululemon and I can see why the market was a little bit nervous around the guidance, but underall, the numbers are still actually pretty good from Lululemon. The only thing you've got to factor in now is that little element of the growing a little bit slower. And when they grow a little bit slower, is that something that's going to persist for something like a year, or is it going to be 5 years? As long as you're buying the right valuation, then you're okay in whatever situation you kind of come in. And as you can tell here, I like Lululemon. I think it's a very good brand, and I like it a lot more than Nike, because with Nike, there's so many issues going on with them. You look at Lululemon's and there's not really that many issues going on at all, apart from a little bit slower growth. So as long as you're paying the right valuation for a little bit of slower growth, and you can kind of see why that's happening at the moment in the environment that it's in, you just got to pick it up for the right valuation, I think. So talking about the right valuation with Lululemon, what could that potentially be at? So I've done a 4-6-8% revenue growth in. At a 35 billion market cap, I put profit margins 16, 17, 18% in, which is roughly where they're at right now. And a 20 times earnings multiple in, because I don't like assuming crazy valuations, but I will put that in a little bit later on. And on the upside, yeah, it's okay. There's, I think you make money from these sort of levels, but that's not enough reward for me. Low side, 13%. On the high side, we're up to 47%. It's not enough upside for me to personally get in at these levels, so it would have to go lower. Ultimately, I'm not going to lie, you guys know me. I did used to own the stock in August. That's when I was buying last time. I think realistically that is once again the levels that I would have to be buying at to be getting the stock again, which obviously would be another 30% drop from where it is right now, and then you can see the upside. The upside now on a 30% drop is 58% to 100% on the upside with no profit expansion and no metric expansion. If we were to put that at a 25 times earnings multiple now, I'm even getting upside on the low side as well now if it has that metric expansion. So yeah, I like Lululemon. I like Lululemon more than Nike. I would be more happy to buy Lululemon over Nike, but I would say that it's probably still not cheap enough for me to buy. I think if I was to buy it, it would have to be about 20-30% lower, and then I could go buy it. But yeah, I like it. It's just not cheap enough, and I know that has kind of been a common theme on the YouTube channel at the moment, where there's so many stocks I've looked at and I go, I like it, it's just not cheap enough at the moment. And once again, we're in that situation with Lululemon that it's probably the same thing. I'd like to own it, and I like it more than Nike, but it's not cheap enough. And for me to own Lululemon, it'd have to go lower. I think it would have to go, if it went to these sort of levels, it'd be nearly 30% lower from where it's at right now. maybe even 20%. I think you're looking at 20-30% lower. Somewhere around these sort of 2024 levels is where I'd be tempted to buy it. So we'll see if it gets there. For now, it's on a watch list. And like I said, yeah, it just needs to go cheaper. And once again, I know I'm kind of like being a bit of a parrot here, but I just look at other opportunities out here. For example, JD Sports. And I'm thinking, why go buy Lululemon when I could go buy JD Sports, which JD Sports is growing roughly nearly the same rates as Lululemon. And I mean, let's go on Yahoo Finance, for example, and let's actually have a quick look. The numbers might not be perfect on here because obviously it's a site more towards US stocks than UK stocks. But, if we were to have a look at JD Sports, for example, they're currently trading at like a forward P of 6. I think it's even lower than that. I actually think it's 5. And if we have a look at the growth expected, 8% last year, 10% this year as well. And, I'm looking at someone like Lululemon, for example, and I think they're trading still at like 18 times forward earnings. It's not terrible, but it's, 18 times. Look, that was a good guess. 18 times forward earnings, which is okay, but for a company with the risk that they currently have, I'd probably want it a little bit cheaper than 18 times forward earnings. I'd probably want to be in the 14, 15 times forward earnings. And, you look at what they're kind of growing at as well. And, if they do grow at 6% or if they do recover to 8%, it's nearly the same growth for JD Sports. But, JD Sports is a third of the valuation. And I'd rather buy that one at the moment, and they're in the kind of same industry. Don't get me wrong, Lululemon will trade at more of a premium because it's a US stock and it's also the actual brand. But you could argue the case, well, the JD Sports are in a better position because they're actually able to sell whatever brand is popular at the time. So that's probably an actual better position to be in. So would that actually deserve maybe even more of a premium than Lululemon? I don't know. But that's why I always weigh it up to. I look at what I own, I look at where the valuation is, and I think that I would just have to see it a bit lower than where it is right now. So I like it. I like it more than Nike. It just has to be a bit cheaper than where it is at the moment anyway. So, that's the video on Lululemon. I hope you enjoyed it. Have a great weekend and see you in a bit.